Yo guys, hope you are doing good. Just Geo hit my TP and these are the entries I took on the GBPUSD. This is my aggressive account where I scalp the market using this liquidity concept from the liquidity pool to the liquidity pool. On my conservative account, I don't take this much of trades. I only take very high probability trades like this. So in this video, I will explain how I took all these trades. First, in order to explain these trades, I want to explain the concept behind these trades, all trades. So behind the concept is when the 1 minute is moving like this, we should wait for the inducement of the structure. So this is the inducement of the structure. So, and I wait for the mitigation here. I wait for the mitigation and trade the market and enter the price here and target this liquidity. Same thing for the sells. When the market is going on the downtrend, I will wait for the liquidity grab and wait for the mitigation. This is the real money transfer happens. The money transfer does not happen here. The money transfer means liquidity should be taken out. Then only the money get transferred. Otherwise, there is no liquidity provided. The order blocks is nothing without the liquidity. The liquidity and the order blocks both should be there. So I will be selling here and targeting this liquidity. This is how I play the price from the liquidity standpoint to the liquidity standpoint and following the algorithm. You can't know. There are lot of concepts, misconceptions. I will explain all in this video. Try to. So you understood the concept, right? So when coming to the charts, first thing we should do the high time frame analysis where the high time frame liquidity is taken out. The high time frame liquidity that got taken out is external liquidity. So until at least the Asian liquidity or this liquidity, we should consider the sells from the marketplace. Why? Because the high time frame liquidity is telling sell. So what happened after the liquidity got taken out? This time I am not in front of charts. I came at 12:30. At this time I will be in front of charts. So what happened is we should use a Fibonacci tool. When we use a Fibonacci tool from this to this, we can sell from the above 50%. We should sell at the premium after the liquidity grab, break of the structure. We can sell the price above the premium. So in this area, I can see the inefficient price action here. So to become efficient, the price should mitigate and go in the right direction. And there is trapped volume also here. Now in this video, I will explain about the trapped volume concept. So when the price is going like this, and let's say there is a break of the structure, now the retail people will sell from this order block, right? Because the retail people don't know this as a liquidity grab, and the smart money people don't know this as the liquidity grab, right? Without understanding the liquidity, guys, you will not be never profitable in the marketplace, because liquidity is a thing you should understand, because the market whole works on that. If you can't understand the liquidity, you will become the liquidity, I bet. See, this reaction is engineered by the market makers in order to induce the more smart money people. Because if the market is giving the reaction in the order block area, it it means the more smart money people will enter. So in this area, the banks sold the orders. The banks have 1 billion sell orders like that. The banks will sell and the banks will buy again, because to induce the more people. Now in this scenario, the banks buy orders are in very huge profit, but the banks sell orders are in very huge loss. So to mitigate the loss, the banks will again come and close the sell orders in the break even and then move the price. Same thing happened here. This is the trapped volume block. If you see here, the market maker knows it took the liquidity, and the smart money people don't know. They will play the buys from here. That's why this reaction is engineered in the marketplace here. This small reaction is engineered in the marketplace here. So the banks bought here and sold. So the sell orders are in millions of dollars in profit, but the buy orders are in lot of loss. So to mitigate the loss, at least at the break even, the market got mitigated here and then sell happened. So we exactly followed the market maker. After this black dozy candle, we sold the market. Simple as that. We are following the algorithm. We are following the secret layer of the smart money. Same thing happen over and over and over and again. So again, where I got the re-entry. If you follow this trend, higher high, higher low, higher high, higher low, higher high, higher low, higher high, sorry, lower lows. Yeah, can you see this the retailers build up? These build-ups are made for the cause to induce the liquidity again. So here if you see the liquidity got built up, and when the retail people got the a trend line breakout, they will buy the market and their stop loss will be here. Again the retail people got induced in the marketplace, right? Again the retail people got induced in the marketplace and I sold the market. I just do opposite. I followed the smart money market makers. See, this is the build-up that was engineered by the marketplace maker, and this is the money transfer order block, clean order block. And I just sold at the order block with 3 stop loss and target the next liquidity point. Understand? This strategy is very simple and effective strategy. If you understand the hidden layers of the smart money, I can't teach all the stuff in one video. If you wanna learn about this complete new type of education where nobody is teaching in the YouTube or anything or Instagram, you can join the session by texting me in the WhatsApp. So good. So next thing, internal liquidity got taken out. Previous internal liquidity got taken out. So we should buy the market at least for this liquidity or this liquidity. So that's why we wait for the break of the structure to confirm it as a good liquidity graph, and we wait for the Fibonacci 50%, same like here Fibonacci 50%, and we wait for the mitigation of the 50% and the order flow. Doji candle mitigated, we are in buys here targeting this liquidity. And again, if you observe the oscillation of the price as we observed here, we should wait for the money transfer in order to get scale. Can you see the money transfer? Many retail people and smart money people will buy here, right? But we sold here just because we know this is the liquidity graph. Liquidity graph, money transfer happened. Money transfer only happened after the liquidity is taken out. So I bought here. Again, in the smallest oscillation of the price, if you clearly observe higher high, higher low, higher high, liquidity got taken out. Can you see the liquidity got taken out? Dozy candle. Same thing happens over and over and again, guys. All these entries are TP hit because of the same liquidity concept. I understand the liquidity. I have spent hours of knowledge in the concept of the liquidity. Hope you find some value, guys. Peace. If you want to join this mentorship, WhatsApp me.